Real quick, do you think
Hey everyone, it's Jeremy McDonald with the McDonald Mortgage Team at Carbon Capital, and also James Addy. We are here for the Next Level Real Estate 2020 Mastermind. Today we're going to be covering market updates. James is going to handle that, kind of go over with what's been going on with the forbearance issues and then also unemployment. And then I'm going to go over how to host a virtual home buying seminar. This is a great time to take advantage of doing something like that. So we want to give you those resources. So with that, James, take it away.
Thanks, Jeremy. I appreciate that. I'm just getting everything pulled up here. Here we go. So the first thing we want to chat with you is I know you guys have heard a lot of information here come across the market in terms of mortgage forbearance and the impact it's having on the ability to obtain a government loan, whether that be FHA, VA, or in some cases USDA. With all that being said, Fannie and Freddie have both announced that they will buy back some of the first payment default loans that are currently in forbearance. However, they will be charging about 700 basis points per loan and about 500 for first-time home buyers. Okay, the loans eligible to be purchased back, of course, are purchases, refinances that are rate and term that also include the closing costs. And just to give you guys a little bit of an idea here, on average, most mortgage companies profit about 50 basis points. So, for example, if you were to have a loan that was $300,000, okay, generally speaking, your company would make about $1,500,000. However, in this scenario, Fannie and Freddie is charging companies about $21,000 to buy back these loans. If you do the math on there, that really just kind of doesn't make sense in terms of the economic state of the current country. The next thing that we wanted to go into first would be before selling the loan to make sure the first payment is made. If the loan was not sold, that means it's not sold yet to a government-backed security, it cannot go into forbearance. You can, however, start the foreclosure proceedings, which will have a dramatic impact on your credit. If the payment is made, then, of course, they would sell the loan. Charge more per transaction. For example, on a loan that was $300,000, a company would generally earn about $1,500. On the first payment, on a loan with the first payment default, the company would cost them about $21,000. Now, how to get from the $21,000 averaged over all company loans? If 10% of loan enters the forbearance, companies must charge 70 basis points per loan or raise their interest rates. So just to counteract this, of course, what we're saying is interest rates would increase to cover this.
Absolutely. We've been seeing that on the conventional loans a lot more this week and even last week, where the rates are going higher on those because of this response that was done. So absolutely. Now, James, on to unemployment.
Right. So currently here in the United States, there's about 164 million people in our labor force. A 3.5% unemployment rate prior to COVID-19 meant that we had about 5.6 million people unemployed here in the United States. The total added claims, including up through today, are now up to 26.5 million. The total unemployed should be around about 32 million, okay? So what we would be doing is we would be dividing the 32 million divided by the 164 people. That gives us about a 20% unemployment rate, okay? But wait, no one's thinking about the people coming back into the workforce or have possibly been helped with some sort of plan. With that being said, continuing claims to 16 million, we must add back the last 2 weeks of new claims of the 9.6 million, giving us 25.6 million. This tells us that about 1 million people came off of the unemployment chart last week, and our MBS highway shows that our current unemployment rate should be closer to about 18.5%. There are 3 states across the nation that have had the largest increase in unemployment. We are seeing California at number 1 with 553,000 people. We are seeing Florida at 505,000 people, and we're seeing Texas at 280,000 people. Now, what you can see here are the figures for new home sales for the month of March here in 2020 across the nation. Last month, there was 627,000 signed contracts. The median sales price across the nation was 321,400. Now, year over year, this is a change of about 9%. We're on a slight decline here. About this time last year in this time last year in 2019, we were seeing about 627,000. So we're about equal with last year. However, the year before, it was a little bit higher at 693,000. So this changed about 9.5% year over year. If you look at the graph that we have here on the bottom left corner, it shows the month to month. We were riding kind of high January, starting the new year, and then February we saw a slump. And then going down into March, we've lost about 0.4% from the previous month of February. Now, by region here, we've been able to break this down. The Northeast was coming in at about 24,000. The Midwest accumulates about 79,000 of here. The South, surprisingly, is about 385,000, and the West is about 204,000. I think that's kind of crazy, Jeremy, considering the South has put in probably the most contracts. However, we saw some of the states in the South had the highest unemployment rate.
Very true, very true. So I think that, when those numbers come out for April, there'll probably be a bigger dip at that point in time. So, as everybody can see, the market still, it's not where it should be. The solution that has been put in place from Fannie Mae and Freddie Mac, it's crap. It's not a good solution. Asking servicers or lenders to take a 5 to 7% hit on a loan that they just originated. Mm-hmm. That's just crazy to think about that. So, but in this trying times, got to think of new ways and be creative to be able to reach buyers and to bring those in. So, with social distancing and still pretty much the whole entire country being shut down, how do we do that? So that's where, being able to host an online home buying seminar is really something that's going to help out with that. So, wanted to kind of go over this with everybody today. So, as most of you know, I do coaching with Tom Ferry. So it was kind of funny. We spoke about this last week and announced that we were going to do this topic last week. And then earlier this week, Tom Ferry, with his Pivot series, did a presentation on this exact same topic. So it was really cool getting to be able to see that and see how, he's approaching that before going into it. So everybody's going to have access to this. So this is a PowerPoint presentation, of course. So you can go in and edit, put your information. Of course, if you're anywhere in the state of Florida, I'll be glad to co-host this with you. If you're in the DC metro area in the States with James, he would love to do it as well. Same thing with Sean in, Las Vegas, Alabama, Texas, Arizona, I think as well. So James, what states are you licensed in again?
DC, Maryland, and Virginia, sir.
Okay. And me, just Florida. So, okay. So kind of looking at this, when you're doing a virtual home buying seminar, there's a few different ways that you can take that. So you can take it as more of a, hey, we have a flow and we're going to go over this flow and we're going to stick to slides, or you can make it more conversational and make it more of like a question and answer. Me personally, I found more success in making it more conversational. However, you want to do what you feel comfortable with. So if you're not the biggest talker and you like to have something that's more scripted, you definitely want to stick with the slides. So, looking at this, starting out, of course, as the agent, you want to have your picture and your information front and center there, and then your lender, if they're co-hosting it with you, or if you have a home inspector, a title person, insurance agent, whoever it is that's going to be co-hosting that, you have space for theirs below. So with this one here, one of the things that you're going to market with this is, 5 myths of buying a home in today's market. So you can talk about that. And each slide is going to kind of go into it. So, the first thing, myth number one, you must have 20% down. Even though Chase is requiring 20% down right now, most of your other lenders aren't. We still have your Home Ready, Home Possible at 3%. You still have FHA at 3.5%. There are a couple down payment assistance programs left. The terms are not so wonderful on those, but for the right person, it is there. Of course, USDA for your rural areas is 100% financing, and we all know and love VA loans, which are 100% financing as well. So that is a myth, and you can definitely talk about that. Myth number two, got to have perfect credit. You don't. There are still options down to a 620. I will say they might not be the best options, but they are there. So that's typically going to mean that they're going to need a little bit more money down, not necessarily on their down payment, but with the closing costs, because a lot of them, if they're going to be around a 620, there's going to be some type of discount point associated with that interest rate. So you don't have to have perfect credit. You can still go down to a 620. James, where are you guys at right now on your minimum credit score? I know Sean's at 620.
So I do have some programs that are available at 620, Jeremy. However, it's going to cost some of our clients to get on the board.
Yeah.
At a 620 or lower, at a 620 to 640, we cannot exceed 50% of DTI. And then most of my investors' pricing opens up back for us at about the 660 range.
Yeah. Yeah, I'm kind of seeing it opens up a little bit more at the 640 range. But yeah, I mean, so even a 660, that's still not perfect credit, not even close.
Right.
There's still tons of people that qualify now. And I mean, this is really giving you a time to where that you can focus on some of those easier transactions and not mess with some of the ones that are like pulling teeth to get done. So myth number three, now's a bad time to buy your home. Now is definitely not a bad time. We're at historically low interest rates, and you have less competition in the home buying market because of the tightened standards for getting a mortgage. So now is actually a perfect time to buy. So that's definitely a talking point that you want to go over. Looking at home price change in the last 5 recessions is also something. So, we're typically speaking, when we have a recession, home values go up. They don't typically go down. So you look back in 1980 and 81 and in 2000, you're seeing between 3.5 to 6.6%. 2008 was different because that was caused by some very careless lending and really the creation of the subprime market and the Alt-A business, which is not existing anymore. There's nothing that's even close to that. So even the non-QM products that went away a month and a half ago did not scratch the surface of what the subprime market was back in the day.
Right.
Also, when we look at the .com and the 9/11 crash, even with those, all the S&P went down, home values did not. Home values went up. When we look at what happened with Goldman Sachs and the GDP forecast, although yes, Q2 is predicted to be down, look back at looking forward at Q3, looking at a forecast of 12% on the gross domestic product and then 10% in Q4. So, I mean, when we come out the other side of this thing, it is going to be good. And that's something you really want to relay to people. So from Wells Fargo's Investment Institute, we don't expect a repeat of the severe recession of 08 and 09 because the virus and oil shocks are not the endemic to the financial system, but are rather external. So once the virus infection rate peaks and we expect a recovery to gain momentum into the final quarter of the year and especially into 2021. So now is a great time to buy, because once we get on the other side of this and everybody is kind of waiting, who jumps in that market, there's going to be a lot of competition.
Absolutely. I can definitely agree with you on that one.
Yep. So myth number 4, you should purchase a home at the top end of your pre-approval. Dear Lord, no. No. One, being just quite realistic, if you have a buyer that's going at that 50 to 55%, especially if it was VA or FHA, which we really can't go over 50 right now. But when you really think about that, your gross income half of it going to your mortgage payment, or going towards bills that are on your credit is pretty scary. I couldn't
Right.
ever personally imagine that my mortgage payment was half of or that my debt ratio was that high. Just wouldn't make sense to me. So you definitely, we don't want to push clients in that direction, especially in this time. Want to be more conservative with them and make sure that we're focusing on what is the payment that they feel comfortable with compared to how much home do you want to buy. So definitely a myth that needs to be busted. It's cheaper to buy a fixer upper. No, it's not. It's definitely not cheaper to buy a fixer upper. Unless you're a real estate investor and you're getting a great deal, you have the resources to be able to get that home fixed up quickly. You have the contractors that will do it at a discount. It's not. Most people that end up getting to buying fixer uppers, it ends up being a money pit. So, people, you're going to get people that are going to be like, oh, I want to go buy a foreclosure. Well, none of the foreclosures that will happen because of the coronavirus are even on the market. Not only are they not on the market, they're not going to be on the market for a year or more from now. So that's thinking that just it's not realistic. And then again, unless you're a professional at doing that, like it doesn't make sense. You're not going to end up getting more for less, which is what they're thinking. So we also wanted to give you 3 bonus myths, just like he's a myth, right?
Right. Right. Or so they saw.
Yes, exactly, right? So banks and credit unions are the best for first-time home buyers. This is so wrong on so many levels. And I hear this all the time. Oh, go to your credit union. Guess what? Your loan officer at your credit union, guess what they were doing 6 months ago? They were a teller.
Right.
They were doing credit card loans, HELOCs,
Right.
something. They are not an expert.
Right. And mortgages.
Because quite frankly, if they were, they wouldn't be working for a credit union for the simple fact of income purposes. But beyond that too, especially with first-time buyers, you want to have someone that they can contact 7 days a week. That if they have a question on a weekend, that they can get an answer to it. That if you're looking at houses at 7 p.m. and need to see which one to put the contract in, that you can get a hold of your loan officer. If you're going to a bank or a credit union, you're not getting a hold of that person. So there's a big difference just from that standpoint alone. That's why you want to work with someone that is a mortgage expert and that doing mortgages is 100% their job. They don't do anything else. Now, this is kind of a crazy myth to me, but I do hear this, is that it's cheaper to rent than to own. And I mean, the statistics just don't back that up. I mean,
right.
The cost of renting versus owning, historically speaking, it takes 25.8% of the median income for rent compared to 21% of the median income to purchase a home or for your mortgage. Now, rents has actually gone up. So you're looking at 28.4% compared to the cost of the home, now down to 17.5. So, I mean, if you're renting and you think you can't afford a home, that's not good thinking at all. And so to be able to relay this to people, with a virtual home seminar and really show them that, hey, this is what you're paying for rent, this is what you could pay for a house, that there's a big gap there. So owning is definitely more affordable. So bonus myth number 3, you can't buy a home if you have student loan debt. I'm going to give that one like half a myth. And I say that that's half a myth because there are some valid concerns there. So with the exception of Fannie Mae, every other loan program, if you have student loans that are in deferment or in an income-based payment status, every other loan type is going to take 1% of the balance of those student loans and use that as the payment for debt ratio purposes. So Fannie Mae is the only outlet where we can use a income-based repayment.
Right.
So, with that, Fannie Mae, of course, that's conventional, so better credit is needed. So there are options there. You just have to be honest with people. If someone is saying, hey, my credit sucks and I've got $200,000 in student loans, okay, let's get your credit better, because the only way you're going to buy a house, unless you're making $200,000 a year, is doing a Fannie Mae loan. And you got to have good credit for that. So, you can buy a home and you can relay that to people. So this is a question that, of course, we get a lot, and I'm sure that you will. So, when you're doing your virtual home buying seminar, this is something that somebody's going to want to know that's going to be on there. So, now some questions and answers that myself and James have got recently. So, James, one of the questions that I'm getting a lot right now, for whatever reason, it seems like a lot of self-employed people that haven't been claiming the correct amount of taxes are coming out of the woodworks wanting to purchase a home. So, how would you handle that conversation with someone that, let's say, they're a 1099 employee for the past year and a half, and they only claim they made $9,000 on their taxes, but want to buy a $300,000 house?
That's a tough one, Jeremy. Sometimes if you have clients who are 1099, you can go with bank statement programs. Generally speaking, you'd have to be in the industry for a minimum of about 2 years, of using. You'd have to be in the industry that you're working for about 2 years to use your 1099 income. Some of my first-time homebuyer programs, unfortunately, we would have some outlets. That one realistically would take some time to get that due. I know, back to what we were saying, someone being a first-time homebuyer, a bank or a credit union, I can tell you much right now, that might fall off there.
Yeah, and I mean, from where I'm at, there's really not any bank statement loans available right now.
Not right now in the market, no.
So, and that's the conversation that I have to have too. So, that's definitely one of the questions that I'm getting. As far as questions direct more towards hosting the virtual seminar, and all that, some of the things to kind of think about when you're doing this is, how do you fill the event? How do you get people to come to this? So you want to be able to market it. So, I mean, marketing it both organically through Facebook posts, through Instagram posts, through LinkedIn, through sending an email out to your email database. If you don't have a CRM, I would definitely advise getting one. MailChimp is good for doing email campaigns. So, I mean, to create a MailChimp campaign, which is free up to 2,000 subscribers, and then send out a blast inviting people to come to your seminar, especially if you do online lead generation, things like that. So that's one way you can do it. Creating a Facebook event, and then sharing that, inviting people to it. Those are all ways that you can get people to attend. And you also want to make sure that when you're doing that you're getting some type of way to collect their information. So, whether you're using a landing page like JotForm, or you're using Survey Gizmo, SurveyMonkey, or doing some type of registration through MailChimp, but, collecting the emails of the people that do attend that is definitely something that you want to do. Also one of the things is doing kind of niches with them. So doing a VA seminar, doing a seller seminar, kind of having some different things there, or, localizing it if you wanted to do one, like let's say in, Virginia Beach, having a specific area and doing that. Also good to have other industry experts like your home inspectors, your title professionals, insurance agents, that will come on and be guests and be presenters as well. Another thing, the timing of it, trying to kind of stick to no more than an hour. People tend to lose focus after that. I mean, I know I do have ADHD, so especially if I'm not on my medication, after 5 minutes, I'm like, oh, squirrel. So definitely keep it from going too long. So, the slides will definitely help, get you there and have some information to go over, but you definitely want to have other things that you can talk about. At the end of that virtual seminar, you want to set up a way for people to continue with a one-on-one conversation. So if you don't have Calendly, I highly recommend Calendly. It's something silly like $140 for the year. And you can set it up to where that people can book appointments with you. They get email and text reminders. So doing a Zoom call or some type of online call and then letting people know, hey, in the comment section, there's a link to my Calendly account. So if you want to do a one-on-one home buyer presentation with me, or ask some questions, get pre-approved, whatever the scenario is, just click that link in the comments and register. So that way you can connect with that person one-on-one and get them on that process to being a home buyer. Let's see here. Anything else you can think of, James?
No, you hit all the major ones on the head. IT questions are always specific, in my area, people ask me a lot about HOA fees and condo dues and how they affect their monthly mortgage payment. Because, in DC, those can be quite high. But I'd go to a professional, either Jeremy, myself, or Sean, and ask us whatever questions you have, and let's see what we can do to help you out.
Yeah, absolutely. Oh, you know what? One of the other things that I've kind of played around with is timing and days, of when's the best to do them. So, typically speaking, outside of a COVID-19, you want to stay away from your typical happy hour hours and, Fridays, weekends, things like that, unless you're doing like early in the day on a weekend. So, this is kind of a unique situation. People are working from home. So, trying something in the middle of the day, whether it's at 2 o'clock in the afternoon or noon or a little bit earlier in the evening, and definitely recording it. So if you're going to use something like Zoom, it's going to record it. And being able to then take that and post that, on social media and in an email blast to, hey, here's a replay of my home buying seminar. You missed it. Now here's an opportunity for you to still gather and get that information. And they're still going to be able to see that link to your Calendly to be able to schedule a one-on-one with you. So, right now is definitely a time where we all have to dig in deep and think of new creative ways to be successful and really up our game so that when we come out on the other side of this, that we're so much stronger than we were going in. If there's anything that you guys think of, if you want any questions, if you have questions, whether they're mortgage related or marketing related, how to do the home buying seminar, if you want one of us to co-host it with you, just reach out to us. We'd love to help you out. We appreciate everyone that was on the call today. We appreciate everyone that's watching the replay. And stay safe. Stay safe. Spend as much time with your family as you can. Hug them and enjoy it, especially if you have kids, because once they go back to school, we all know how that is. So take advantage of the time and make the most of this. So, James, is there anything you want to add?
No, I think you said it all well, sir.
Awesome. Well, thanks everyone for viewing. We hope you have an awesome, wonderful day. And as always, if you need anything, we're here for you. Oh, hey, if you're a football fan, say a prayer for me. I'm a Jaguar fan. I wore my hat today. We normally screw everything up, obviously. So pray for us that we don't screw it up tonight and that we actually do good at the draft. And whoever your favorite football team is, I hope you guys have a great draft as well. So everyone have a wonderful evening.
Alrighty.
All right.